Good afternoon to everyone on the East Coast. Good morning to everybody on the West Coast. Thank you for attending today's presentation. The topic for today is intellectual curiosity, managing commercial banking relationships with industry intelligence. I'm James Mulville, Vice President of Business Development at IBIS World, and I'll be leading today's call. There will be three main themes of today's presentation outlining why intellectual curiosity is paramount to your lending process. In order to kick things off, we're going to discuss changes to the environment that you're operating in. We're going to talk about what has actually changed since the global financial crisis and how your customers' needs changed. Next, we'll discuss some of the challenges that you and your leadership are facing with commercial and industrial lending. And finally, we're going to conclude with how industry intelligence is a pivotal tool for building and maintaining customer relationships. So to get things started, we are going to first talk about those market conditions. So due to more favorable economic outlook and increasing competition, many banks are actually easing their standards to increase their C&I lending. So we can see this fact from the Federal Reserve Research Department, or FRED. Their C&I lending is actually at an all-time high. So when we're looking back all the way through the cycle, as you can see in the gray, we've actually been at the high point for many years running. While many banks are heavily committed to commercial real estate, there are some major issues that can elevate the risk for the bank when being involved in CRE. Higher exposures, oversupply, complex structures, increased correlation risk. And Fred's surveys actually indicate that C&I is increasing at a faster rate compared to CRE. Given the level of competition and available capital, spreads are actually tightening. This means that the demands on the relationship managers as well as lending leadership are even more difficult when it refers to the right customer mix. The November Senior Loan Officer Survey reported slightly weaker commercial and industrial demand from large and mid-market firms. The majority of this was actually driven by decreased investment in both plant and equipment. Along with favorable economic conditions and tax incentives, delinquency rates for C&I have dropped since 2016. Next, we're going to discuss the challenges that are facing lending leadership. So lending leadership are tasked with some of what somebody might actually consider walking a tightrope in order to deliver a perpetually healthy lending portfolio. It all comes down to the soundness of that lending portfolio. So there are many headwinds facing your lending leadership, decisions on the loan mix, maturities, pricing, volume. All these things need to be analyzed in order to have better risk and portfolio decisions. Most banks are inhibited by their geography, and when that's shackled with the industry's concentration pools, identifying the right target market and the right target customers actually becomes a pretty daunting task. While your bank's brand recognition may secure a meeting with a specific prospect, being able to dominate your local market requires thorough planning and persistent execution. Many factors must align in order to replace an incumbent. So when you're going against your competition, you're going to have to be able to prove that your bank is better, and part of that goes into intellectual curiosity. So banks that are industry agnostic need to make sure that they have the right mix to match the bank's appetite, but also the community's appetite. You don't want to have oversaturation within your markets. They say that familiarity breeds complacency. While most lending leadership are not tasked with flipping the script, they do oversee keeping up with the times and make sure that their teams are best positioned to win new business. Along with growth strategy comes the overarching need to focus on your most profitable customers, those that are capable of repayment and that are able to grow their relationship with the bank, so those long-term repeat customers. As a lender, you are facing all of these challenges. So you're going against the market as well as going against, not necessarily going against, but going along with what your leadership has in place. So as a lender, you can be pulled in many different directions and all at the same time. You want to make sure that you're working with the right customers. You're going to want to learn as much as you can about your client's industry. Going in blind for the third meeting is just as bad as going in blind for the first meeting. So preparation is key. They say that time is your most valuable asset. There's only so much time in the day and a seemingly unlimited amount of data that's available. Being able to streamline your process for preparation is going to help you. In addition, you want to make sure that the industry that you're working with or the operator that you're working with is within an industry that's going to pass the scrutiny of your credit team. You can improve your efficiency by focusing your time on the next customer. So if it isn't going to fit the bank's appetite, move on to somebody who will and a business that will. So if you think about the last deal that you lost, what factors led to that client's decision making? Was it something that your competitor was able to do that you weren't? Was your competitor able to forge a better relationship with them? With increased amount of C&I lending that we saw within the market condition section, you need to make sure that your messaging stands out above your competitors. Your input predicts your output. So your increased competition are tasked with sharpening their skills. In order to forge the long-term relationships that every banker desires with their clients, either directly with their clients or via referrals, you're going to want to have a customer-first mentality. In today's lending market, customers can tell your intentions. If you're just about closing your deal for the paycheck, they're absolutely going to know that, and they're going to refer their business to another bank. So knowing your client's industry opens up opportunities for you as their banker. So you can really go in with the microscope and understand those potential areas that need to be addressed. And ultimately, you want to keep that dialogue going with each one of your customers, because that's going to be how you create a single-use customer into multi-year and multi-pronged customer for the bank. So you succeed when your clients succeed. Again, it all comes back to intellectual curiosity. So part of your initial meeting is to gather information, to pre-qualify, see if the opportunity is of interest for the bank, but also if the customer gives inadequate answers, you might not want to lend with them. So you need to make sure that you understand what the industry standards are and the industry norms are. In order to do that, you want to ask questions to find out if the client is growing. Get a sense of their financial strength, where they are as a player within the market, what is their outlook, what are they projecting, what external and internal factors are they monitoring. Needs identification, it's imperative to create dialogue to uncover your customer's perceived needs. Beyond the basics is uncovering the needs that the prospect isn't aware of. So this includes things like new technology or technology change that might be happening within the industry, where the customer might be aware of the change, might be not aware of that change, or maybe they want to be ahead of the curve. Or another example is key success factors. So those considerations that differentiate successful companies versus those flatlining within the same industry. Successful lenders are going to discuss these implications and the implications of following the key success factors and the technology changes with their customer and that customer's business. If potential areas aren't addressed, IBIS World actually provides you with questions in the form of internal, external questions. You can advise that client or that customer on their best practice within their industry. Again, you want to keep that dialogue going. So you want to reflect on the prospect's current situation. You're going to want to share stories about similar customers that you've worked with and how you've helped them fix or identify problems that they may or may not have been aware of. The customers don't necessarily have to be within the same industry. You can also look at some of the external factors that they're facing through headwinds and tailwinds. Ultimately, you want to help them. While your role is not to be a consultant, you do want to show that you've done your homework. Leaving behind a copy of their industry report is something that you can do to help them focus on areas of growth while learning from the market leaders within their industry. Now we're going to jump into the IBIS World website. We actually recently launched our new website, which is called My IBIS World. On here, I will take us through U.S. content. However, we do have collections for other countries as well. Canadian, for those of us in North America, is a option as well. But for today, we will focus on U.S. industries. To talk a little bit about coverage and why it's so important to make sure that you understand your particular client is because there are so many different sources of data that are out there. A simple Google search will pull up millions of relevant pieces and those that won't be relevant as well. So with IBIS World, we segment our industry research into two different categories. One of those categories is following the North American Industry Classification System, or NAICS. Within that category, we actually have 700 different industry titles. So if I do click on this, this will bring us directly into the various sectors that we have coverage. So for example, within mining, we have 11 reports. And if we were to look at manufacturing, we have 194 reports. So you can scroll through and look at the various different titles that we have coverage. We produce all of our reports, with the exception of sector reports, at the 5-digit level of the North American Industry Classification. North American Industry Classification, and what that does, it's the level at which businesses operate. We do segment even further in specific industries where we know that there are some differentiation between those different industries. For example, with home builders, under the construction sector, we can see that we have home builders, apartment and condominium construction, housing developers, and remodeling. All 4 of those industries have different cost structure, they have different factors affecting them, and therefore we produce different reports for each one of those different topics. In addition, as a direct result of client feedback, we also have a specialized industry report collection. Within the specialized industry report collection, we do cover 670 additional industries. So these industries often are industries that have differentiation from the industry that they would operate in within NAICS. We also know that the government is a bit of a laggard when it comes to updating classification. And as a direct result of that, and as a direct result of feedback from our clients, we've created this additional 670 report list. Within here, you can see, for example, within some of the consumer goods and services, we have bridal stores, maternity wear stores. So it does bring it down into additional granularity. And all of the same content that we have within the full industry reports are going to be found within each one of these specialized industry reports. In addition, you can look at certain examples like fast food chicken franchises is a segment of our fast food report. It's all the rage right now across different parts of the country with Popeyes versus Chick-fil-A versus KFC versus McDonald's. So we do have reports that have coverage even down to that level. So it helps the relationship managers be able to focus their attention and the questions that they're asking into the actual industry that they're operating in, as opposed to just a generalized industry. The square peg and the round hole theory. In addition to that, we also, and these are a lot of the drivers behind the industry, we cover the business environment profiles. So these are the external forces that drive the success or the decline of industries. So these are outside the control of any one industry. However, they do affect, again, the profitability, the success, the demand, many different factors that fall into our industry reports. So for example, we do have different domestic economy issues such as consumer spending, we have financial markets, we have red meat consumption within other sections of our reports, new car sales. All of these are going to affect various industries, and we also provide full write-ups on these. So I know I had mentioned previously about the ability to look at similar clients. Well, if you know and you're working with a segment of clients that is your specialization, you have the ability to look at what other industries are affected by that headwind or that tailwind through their external environment and share that directly with your prospect. For today, I'm going to bring us back to the full, to the first page. We can see that we could do a keyword search here. I have actually set up some bookmarks for a variety of different industries that I work with. So sporting goods stores in the US, and you can see that we have this iExpert report. This is going to be the first port of call if you're a relationship manager. So we have 3 different sets of reports. One of them is our industry report. That's typically anywhere 30 to 40 pages in length, full detail of everything that's going on within that industry, updated 1 to 4 times per year, depending on the volatility of the industry. And then we have the iExpert reports, which are essentially summaries of the full industry report. So what that summary does is it gives you the ability to quickly come up to speed. Again, if we recall back from the slides, time and the time crunch that we face is our biggest obstacle. It's our biggest asset, and we want to make sure that we're focused on becoming intellectually curious without becoming a know-it-all on the industries that we're covering. So here within the iExpert, I do have the ability to download this report. So if I did want to bring this and print this out, bring this to a meeting ahead of time, I would be able to do so. Where we have key statistics across the top, listed as single year or annualized growth throughout a period of time. Within the full report, we're able to analyze this through an entire time series, so 10 years prior, 5 years forecast. What I recommend for relationship managers when they're working with their clients are they want to talk about some of those pain points that the clients are facing. They also want to talk about some of the areas of success that the client potentially could have or potentially would need some additional lending to support. So within here, we have the industry structure. The industry structure talks about, again, some of those pain points that the industry might be facing. So if I had a sporting goods store in the US, I should mention that this industry is the brick and mortar locations of sporting goods stores. Competition level is going to be part of my biggest concern. So we see that that is a high section. So once we go into the full industry report, I'm going to want to analyze that and find out why competition is so high. We talk about the products and services segmentation, about what type of products are actually being sold based on the total revenue of the industry. So here, sporting goods stores, brick and mortar again, $49.4 billion in revenue. And we can see that the largest portion of that is sporting equipment at 43.2%, followed by firearms and hunting equipment. We discussed the cost structure in much greater detail within the full industry report. Industry performance is a really key section. If I want to come up to speed very quickly on the industry and be able to have that initial conversation, I want to know three different things. I want to know what's happened to this industry over the most recent 5 years, what's happening today in the industry, and finally, what are the projections for this industry? Where are there areas of growth and where are there areas of decline? What this section does is it will look at the most recent 5 years in the first paragraph, what's happening today, and ultimately the final portion of the section is going to be the outlook. We include the first major threat to the industry as well as the opportunity. Now, as a relationship manager, you're tasked with having ongoing conversations, again, not just that initial phone call, but you want to be able to relate to their industry, show that you're not a novice when it comes to understanding some of the pain points that they're facing. So we break our questions into two different segments. One of those segments is role-specific questions. Role-specific questions are going to be targeted at various different people that you might be speaking with at the organization. So for example, if you're speaking with someone who's responsible for sales and marketing, you would want to understand whether or not they specialize in a specific set of products or whether they diversify their products. So here, does your company specialize in one corner of the market or do they retail a diversified range of products? Then, specific to the industry, we discuss what those areas of discussion might happen. So it's some good follow-up to have with that client. In addition to sales and marketing, we also have questions for strategy and operations, technology, compliance, finance, and then we have a different segment of questions. So these questions look at the external impacts and the internal impacts. So external impacts are factors outside the control of any of the operators within this industry. So has the intrusion of mass merchandisers affected your sales revenue? What value-added services do you offer to give you a competitive edge? This is a question that you might want to dig a little bit deeper into how they answer that question. Is this going to fit the appetite of the bank if they're unable to have substantial answers to these questions? But it also shows, again, you did your homework and you're intellectually curious. Each one of these are also based on those business environment profiles that we had seen previously within that subsector, within that section of reports. Lastly, we have the internal issues questions, and these internal issues are going to really focus on the key success factors of the industry. So how do the top operators in the industry differentiate their business or their customers to be the most successful within the industry? So as we can see here, seasonality of production is going to be a major issue for sporting goods stores. So how do you manage input costs? Do you have deals in place based on economies of scale? So some merchandise is seasonal in nature, so retailers need to ensure that sporting equipment is on display prior to and throughout the corresponding season. Now I want to bring us quickly into the full industry report. So in terms of navigation and understanding the different industries that we cover, again, we have that 1,400 industry reports. However, on the left-hand side, we see that we have our iExpert summary, which is what we're in right now. That's, again, the first port of call for relationship managers. I want to go into the industry report as it pertains to the sporting goods store industry. So when I click on the industry report, it's going to bring us into the full industry report. So again, this report is going to be that 30 to 40 page in length report. This is probably going to be the report that I might want to leave behind with my client when I'm doing my initial meeting, to show them that I've done my homework on their particular business. So right here, you do have download options. You can download this report in a variety of different formats. To make sure that we're in the appropriate industry, on the full industry report, there is a industry definition, as well as we discuss that no industry operates in isolation. So we do know that we need to understand what's going on in their supplier industries. The supplier industries are obviously, if there's massive increases in pricing, are going to squeeze out the profit from sporting goods stores unless they're able to pass those costs on to their customers. We also discuss the demand industries. Each one of these are hyperlinks to those industry reports. So sports coaching, physical therapists, skiing, snowboarding, so on and so forth. IBIS World is an industry information provider. However, we do analyze the top players within industries. So here you can see that the major players, Bass Pro Shops, Dick's Sporting Goods, Academy Sports, and Outdoors. We do talk about what their contribution to this industry is, but it's not as in-depth as other tools that you likely have at the bank to understand those individual companies. Quickly, I want to jump into industry at a glance. This is another great point, another great section for relationship managers to take a look at. What we do is we break out the key trends for the industry into easily digestible sentences. So here, as team sports participation continues to grow, industry operators will likely experience increases in sales. Over here, more retailers are expected to seek exclusive contracts with suppliers. So these are some of the things that are happening within the industry that we need to be aware of, that we might want to bring up within conversation with the client. We also have SWOT analysis that talks about the strengths, weaknesses, opportunities, and threats to the industry. So the opportunity for the industry is the time spent on leisure and sports. The weakness, however, we can see the top weakness here is that high competition level. So we'd want to find out, now that we understand this, I want to actually go into our chapter on the left-hand side for competitive landscape and identify what's happening within this industry to make it competitive. So market share concentration, as a banker, this is an important section to look at because it looks at the capital intensity compared to the amount of labor costs. And in terms of initial labor costs, it's not going to be anywhere near the cost of initial inventory. So here we talk about the inventory costs within this section, and that's why in terms of the major players within the industry having between 30 and 70% of the dominance, it's going to squeeze out some of those smaller players because they're able to have that brand recognition within the industry. And we'll actually go into the reasons why the industry has additional capital requirements in just a moment. The key success factors are going to look at, again, those 250 success factors that we analyze across all industries. And we put the most relevant key success factors behind each one of the industry reports. So what are those top players or those growing players in the industry doing to remain competitive? Now I'm just going to scroll down into, again, we could look at specific, if we need to look at their balance sheet or their income statements, we could look at where each one of those dollars are going over a period of time as to industry standards. But I do want to know the basis of competition. Here we see that the competition level is high and the trend is increasing. So what are the factors behind that? One of those factors are going to be internal competition from other retailers that are actually selling other sporting goods stores. So they do have already that regional presence perhaps within the area, and they're able to remain competitive, exceed the competition through having that loyal customer base. External competition is going to analyze the other industries outside of the sporting goods store. So they have external competition from department stores, big box retailers, so your Walmarts, your Targets are going to also carry a lot of the similar products that a full sporting goods store would carry. And therefore, what's happening within those markets that are driving folks to that store compared to a sporting goods store. Barriers to entry for the industry, this is the section I was discussing before, where it is medium and it has to do with all the costs that are associated with that. If you are one of those larger players that are found within the market share concentration being medium, you're going to have the economies of scale to be able to purchase a wide range of products, probably at a lower price point, whereas the newer operators that are entering into the market are going to have a difficult time staying competitive due to the high costs of entering into that market. We also provide a section within our industry report on the operating conditions of the industry. The one section I do want to just quickly go through before we wrap up and go through some questions is our technology and systems section. And what this does is this will look at where is the rate of innovation, where is the innovation concentration, is there a sense of disruption within the industry? And I've mentioned several times throughout the presentation that these are the sporting goods stores that are brick and mortar. Those that have a dominant online presence are stealing market share from those that are just brick and mortar stores. So we do talk about that within the technology section of this report. So disruption really stems from e-commerce and the ability for consumers to purchase their goods from another industry. So this is again, the full report, which has a full table of contents on the left-hand side. We do have the ability to share this with the client to make sure that they have a great understanding of their own industry, but also to show that we've done our homework. Before we jump into the final questions, I did just want to look at the industry risk ratings. Typically, you're not going to use this for your initial call. However, again, we want to focus our time to make sure that we're working with the appropriate client set and that we're going to be able to pass the scrutiny of credit. IBIS World's developed a 1 to 9 scale of risk rating. Each one of the industry reports have 3 different segments that represent the industry risk, starting with the structural risk, which will look at these 7 different categories: barriers to entry, competition, level of trade, level of assistance, life cycle stage, and the volatility of the industry. And essentially, as a relationship manager, we're not going to want to do the full deep dive into understand every single aspect. But again, if there's a super high number, a 9 being the highest possible risk score, we're going to want to address that and make sure that we're presenting this in the best possible light, or at least present the mitigating business rules that that company has to be able to fend off some of these higher areas of risk for their industry. So again, competition, we've seen previously that was very high within the iExpert as well as within the industry at a glance. We could also see that it's high within this section. If we wanted to, we can scroll right down to that section to understand why competition is a difficult factor for the industry. Same thing goes for the growth of the industry. This will look at the forecast of the industry and ultimately the sensitivity of the industry, which looks at those external factors and determines whether or not they are a positive influence, a negative influence, and to what degree are those an influence to the industry. So here, external competition of the sporting goods store industry has a 20% weighting, has that 8, 1 out of 9 scale that is a high risk for the industry. So we'd want to, again, address whether or not our client has a presence online, whether or not they have the brand recognition and the marketing needs to be able to be a successful operator. So does anyone have any questions? You can easily use the question section on the GoToMeeting should you have any questions. Okay, I do have one question so far. How frequently are IBIS World reports updated? So our reports are updated 1 to 4 times per year based on the volatility of their industry. If you do bookmark a report, you'll actually receive an email notification. So on the IBIS World webpage, we've seen the bookmarks that I had on the opening page. You will receive an email stating that the new report's available for review with a link to go right back into that industry report. Okay, we have, can we share these reports with our customers? Yes, absolutely. That's one of the core uses of IBIS World is that sense of being intellectually curious is to actually share these reports directly with your clients. And looks like we have one more question. So do you have local data for our geography? So IBIS World does, I do not have it open on my account. However, IBIS World does have a state collection. Currently we cover 16 states. So this collection is a growing collection. Unlike many of our competitors, we don't focus actually on the generalized local environment. Instead, we actually produce these industry-specific reports that cover the top industries within those states. Those reports actually also include local business environment information. So for example, in New York, where I'm located right now, you would have the ability to look at some of the local business environment information and how it pertains to those top industries that are within New York. All right, well, thank you very much for joining today's presentation. Again, I'm James Mulvihill, Vice President of Business Development at IBIS World. Should you have any questions about today's presentation, or should you have any questions about the service that we do offer, please feel free to visit ibisworld.com or feel free to call us at 1-800-330-3772. I apologize for that number. Again, you can fill out any of the contact us forms on ibisworld.com. Thanks again, and hope everyone has a fantastic rest of the week.